Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Mark Marex, Senior Director of Index Research and Development at Nasdaq Investment Intelligence, for an update on Nasdaq 100 technicals and what we've seen from the index's largest constituents in terms of earnings. Mark, it's great to see you as always. Welcome back to Trade Talks, and certainly a much different picture than when we spoke in the fall in terms of technicals. Give us an update on what you're taking a look at.
Thanks, Joe. Great to be here, and especially during a very momentous week. We had a bunch of the really big mega cap earnings come out over the past week or so. Today, you can see the index is up almost 2%. That's really on the back of just blowout results from Meta Platforms. They're up over 20% today, on pace for the single biggest market cap gain of any company ever in history. That's how much they smashed it. They're going to start to pay a dividend. They're upping their guidance. Just really kind of firing on all cylinders after sort of some scary times in late 2022 for that name. Amazon also knocking it out of the park, really beating expectations on top and bottom end. They seem to have gotten really wise around expenses and are now moving into a position where, they're getting way more profitable, throwing off a lot more cash flow, not starting a dividend yet, like Meta Platforms did, but maybe getting closer to that. And that has been kind of a mixture, a mixed bag in terms of those Mag 7 names over the past week or so. We started off with Tesla kind of disappointing, and then Microsoft certainly beat. Google was kind of in the middle. Alphabet was in the middle. There were some concerns there about their search business. And Apple was a little bit disappointing, not on the top or bottom line, but about sort of the trends that are going on in China, one of its biggest markets. So a mixed bag, but overall, we are coming out of this earnings season with 6 of the 7 Mag 7 names, I think, in a really, really strong position. If you look at RSI, we recently jumped above 70, which is in the green there, traditionally the indicator of when you get to be overly bullish, right? You can see we jumped back down towards kind of like the mid 50s most recently. And not really going into this earnings season with too much, I think, positive momentum. January a bit choppy, but way, way better than what we were seeing sort of last time we spoke in late October.
And Mark, if we take a look at it from a shorter term perspective with the moving averages, what does this indicate there?
Yeah, so this is a very simple kind of 20-day in the gray there, 50-day in the red, moving average versus the NDX index closing price. What I highlighted for you is where we're at with the 20-day heading into today. We're at 17,048. We touched that a couple days ago when we had that down day following the sort of disappointing earnings from Alphabet that was dragging the index down, and then we bounced right off of it yesterday. Today, we are up another 326 points, up to 17,671 right now as I'm talking to you. So that 20-day pretty much did its job in terms of providing a bit of short-term support when there was a bit of trepidation with the index and with some of those earnings. We're bouncing right off of that, and you can see the longer-term trend there is really staying strong with that 20-day quite a bit ahead of the 50-day as sort of another level of support if we were to hit some kind of a challenge during earnings season or with some other macro news out there.
And is there any divergence when you take a look out into longer term?
No, we're looking pretty good on longer term, right? I think what was going on in October, late October when we last spoke, there was about a correction of about 10% from late July through late October, and you could see the blue line in this case actually did dip below the top line, which is the red, which is the 100-day moving average. But it did find support from that 200-day in the gray. It sort of touched it very briefly and then bounced right back up and then found its way back above the 100-day. Hasn't tested that ever since, right? We closed out 2023 really strongly with this index on a technical and on a fundamental level, and that's really just continued this year so far. I think the technical setup looks really good now to get through the rest of earnings. Really, it's just NVIDIA that's left out of the Mag 7. But to have a number of these big names in the rearview mirror, given how high the expectations were, right? Considering that, Meta was up over 100% last year. Amazon was up something like 80%, Microsoft, Google 60% up last year. These were just incredibly high expectations going into this earnings season. And a lot of these names have really, really delivered, if not sort of smashing consensus expectations, then at least beating by a little bit, despite the high bars that were set.
Right. And Mark, of course, the question investors are asking themselves, is it safe to buy into this surge? Is there anything you can tell from options positioning?
Yeah, so on the left, that tracks the overall U.S. equity put call ratio from SIBO. The purple line I've drawn out is the 0.7 ratio of puts to calls that are out there that are active in the market. That is traditionally the boundary between what's overly bearish, right? If you got more than 0.7 puts for every call out there, that means folks are looking for a lot of protection. We had that crazy spike at the end of 2022, at the end of a really tough year for investors. That kind of made sense heading into 2023, looking for some more downside protection. And we did have a couple smaller spikes in late 2023 as well, but that's all settled down. We're back now below that purple line around 0.6, maybe 0.65. And then if you look at what's happened with the VXN, the SIBO NDX volatility index, we've been on a very, very steady downward trajectory, and we even touched an 11 handle yesterday. It was very brief. This has bounced back up today, despite the up day, has bounced back up to about 17. But that's the lowest reading I've ever seen, is a reading with an 11 handle on the Nasdaq 100. And in general, the longer term trend there is, yeah, maybe we've spiked and touched 20 a couple times over the past, year and a half. But we've settled into a pretty calm market with a lot of those mega cap names really strong fundamentally, really anchoring the index and kind of setting it up for potentially another leg up this year. We'll see if the mega caps can sort of pass over some of that leadership to some of the smaller names in the index and have that rally really broaden out this year. That's what I'm looking for.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.